let's start. First is saying, in broad terms, the difference between microeconomics and macroeconomics is that. So what is the difference between micro and macroeconomics that you have to answer, and you have these 4 options in front of you, in which the first one is talking about that they use different sets of tools and ideas, okay. Second is saying microeconomics study decision of individual people form, and macroeconomics study the entire national economy. Third is saying macroeconomics study the effect of government regulation and taxes on the price of individual goods and services, where microeconomics does not. Next, microeconomics study the effect of government taxes on the national employment rate. Clear? So these are the 4 statements we have. Out of that, you have to tell which statement talks about the difference between micro and macro. So you can say microeconomics study the effect of government taxes? No. Macroeconomics study effect of the government regulation and taxes? No. Micro and macro is the study of economy in which you are doing at the individual level or the whole level. They use different set of tools. Right answer is B. One second. Right answer is B. Microeconomics study economy as an individual level, individual people, individual firm, where the macroeconomics study the entire national economy. It means very obvious, very simple. Right answer is B option. Okay, next question. Next we have, read the following statement carefully and choose the which statement incorrect ones in relation to the concept of mixed economy. So we have these options. 5 statements are there. Out of that, you have to tell which of the following is incorrect one in relation to the mixed economy. So mixed economy is also known as dual economy, and you have to answer which of the following is correct. Okay. So first is saying all societies are mixed economies with element of both market and socialistic. There has never been 100% market economy, although 19th century England came close. Third, today most decisions in United States made by the government. Okay. Fourth, but the government plays an important role in overseeing the functioning of the market. Government passes laws and regulates economic life, produce goods and services, and control the pollution. Okay. Fifth, for most societies, nations today operate as mixed economies. India, right from the beginning of 1991 reforms, has been a mixed economy where public sector, private sector, and the joint sector coexist and complement each other. So out of these 5 statements, what do you think which of the following is the incorrect one? The incorrect one we are asking about. Okay, so the right answer here will be if I talk about the first one, mixed economy with the element of both market. Acha. Socialistic economy is also known as a command economy or a planned economy. Capitalistic economy is also known as a market economy or the laissez-faire economy. So the market economy means capitalistic. So when there is a capitalistic economy plus a socialistic economy, that's a mixed economy. This is true. First is true. Second is also true. There has never been a 100% market economy. Third is saying, it means first and second is true. We have to find out incorrect option. It means it cannot be the B option. It cannot be the C option because first and second are true. And you have to find incorrect. So it can be A or D. Now, third is saying today most decisions in the US are made by the government. If government is making decision, it means USA is a socialistic economy. Do you think USA is a socialistic economy? No. China is a socialistic economy. India is a mixed economy, but US is a capitalistic economy. That's incorrect. It means third option is incorrect. Third statement is incorrect, sorry. Fourth is saying, but the government plays important role. Obviously, now, if the capitalistic economy is there, it's not like the private companies will decide the law and order. The law and order will be decided by the government. The production will be done by the government. The pollution will be controlled by the government. The social welfare will be done by the government. This is also true. Next, most societies, nations today operate as the mixed economies. Okay. India from right beginning of 1991 reform. No such kind of point has been seen in the economic reform situation in the 1991. So the right answer is third and fifth option, or the statement, sorry, is incorrect. So the right answer will be A option. Right answer will be A option. Okay. Next question. Macroeconomics is a study of economics that deals with the four major factors. So macroeconomics, you know, it talks about the economy as a whole. So it deals with the four major factors, and the options in front of you are these: household, firm, government, demand and supply; household, firm, government, external sector; firm, government, free market, regulation, or none of the above. So what do you think? Which of the following are the four factors that deals or that study the macroeconomics? So acha, before answering this question, I want to let you know all that when you are talking about macroeconomics is the study of economy as a whole. When you are studying economy as a whole, it means very obvious you will be counting the macroeconomics data here. And when you are counting macroeconomics data, one of the macroeconomics data is GDP. Because it's very obvious now, you are not calculating GDP of individual person, you are calculating GDP of a country. So that's a macroeconomics factor. So what is GDP? GDP simply means the money value of all final goods and services produced within the geographical boundary of a country in a financial year. Whether it is produced by Indian or it is produced by foreigner doesn't matter. But the production should be done within the geographical boundary of a country. So GDP stands for gross domestic product. Definition is money value of all final goods and services produced within the geographical boundary of a country during a financial year. Okay, that's a GDP. And how to calculate GDP? We have a formula: C plus I plus G plus NX. This is the formula how you can calculate the GDP. If you want economic growth means increase in the production. If the production increases, the GDP increase. If the GDP increase, economic growth will increase. It means macroeconomics will grow. So here the C stands for consumption. Consumptions by household. Consumption by whom? Households. Okay. Then I stands for investment, and that investment is by the private or we can say private firms. So private investment is denoted as a I. And G stands for government expenditure here. And the NX stands for net exports. And how to calculate net export? Exports means selling goods from India to abroad. Hana, selling goods to abroad is the exports. And how to calculate net value? Net means remained value of exports is what? So what you have to do, exports minus imports will give you the value, how much net exports value is there in the country. So this is how you calculate the macroeconomics data, GDP. Okay. So consumption done by households of the country, investment by the private firms, third, expenditure by the government, and fourth, net export. Net exports you can represent as which of the following option? First is saying households, that can be represented by C, firms can be represented by I, government can be represented by G, but demand and supply cannot be represented as a net exports. Third, firm again I, G, free market, regulation cannot be defined under the GDP. Here households means the consumption that households do. Private firms investment will be counted, government expenditure will be counted, and external sector means net exports. So when you calculate all the value of these four factors, it gives you the study of economics. And these are the four factors. Okay, factors are households, firm, government, and external sector. These are the four factors we have. Clear? So the right answer will be your B option. I hope it's clear to all of you. So that's very simple. If you know the definition of GDP, if you know the macroeconomic factors, you will be easily able to answer the question. Now, no contemporary society, nation falls completely into either of these polar extreme categories. Rather, all societies are dash economies. So what do you think? What is the societies are? Mixed, capitalistic, socialistic, or market. So you can see capitalistic and market economy is the same. So it can't be B, it can't be D. It can be socialistic, it can be mixed. So the all economy cannot be the socialistic now, but all societies are what? Mixed economies. So that's why the right answer will be your A option. Clear? Next question. Next we have here microeconomics concerned with the behavior of dash. So microeconomics means a study of economy as an individual. So we have four options. First, GDP, individual entity, economy as a whole, or none of the above? As I have given you already the understanding of the topic micro and macroeconomics. So economy as a whole is a study of whole economy. That's a macroeconomics. GDP, I have just told you, it's a factor of macroeconomics. So, but when you are studying individual level, that's a microeconomics. Microeconomics means a study of individual. Whether an individual person, entity, business, everything can be counted, but at the individual level. So, right answer is B. Next. Now, the definitions. Achha, one thing I forgot to tell you, the definitions are very important. Okay. The definitions are very important in the paper. Why it is important? Because there are mainly 4 economics in the economy. Hana, the 4 economics are there and they have given the 4 definitions. Out of that, one is Mr. Adam Smith, Mr. Alfred Marshall, Mr. Leon Robbins. And the 4th one I will be writing here. That is Mr. Paul Samuelson. Mr. Paul Samuelson. And he has given the definition of economics. That's a growth definition. That's what? That's a one second. That's a growth definition. Okay. So that's what? That's a growth definition. Okay, that's a growth definition given by Mr. Paul Samuelson. Now you have to answer me here that out of the 3 options that has been given in front of you, which of the following is the correct combination, which of the following is the correct match? Like we have welfare definition, scarcity definition, wealth definition. So Mr. Adam Smith, Mr. Alfred Marshall, Mr. Robbins and Mr. Paul Samuelson, they have given us the wealth definition, welfare definition, scarcity definition and growth definition respectively. I have given the number of economics in the same sequence as I have given the definitions given by them. So you can see welfare definition given by Mr. Alfred Marshall, scarcity definition given by Mr. Robbins and wealth definition given by Mr. Alfred Marshall and the growth definition given by Mr. Paul Samuelson. So this is very important. So the first one have a option number B. It can't be true. It can be true. It can be true. It can't be true. Okay. Second is saying second is C. Second is A. And second is C. Okay. So it means this is the right answer. And the third one is A. So right answer will be C option. The correct answer is C. So do remember their definition because this can be asked in a multiple way. They can ask in the maths the following one-liner or statement-based questions. So that have to be remembered by all of you. Clear? Next. Next question is talking about the definition of Robbins can be analyzed as follows. The definition of Robbins can be analyzed as follows. So I have told you Mr. Robbins has given a scarcity definition. Mr. Robbins has given what? The scarcity definition. And the scarcity definition can be defined how? Can be analyzed how? First is saying man has unlimited wants and needs. Second is saying the means to satisfy the wants are limited. Third is saying means or resources are not limited but also have alternative uses. Fourth is saying man has to make a choice how to make use of limited resources to satisfy his unlimited wants. So you have to tell the scarcity definition of Mr. Robbins is analyzed by which of the following statements? A, B, C or D. So man has unlimited wants and needs, that's not sufficient. Means to satisfy the wants are limited, that's also not sufficient. Then means or resources are not only limited but also have alternative uses. Okay. So if you are saying that resources are limited, needs are unlimited, that's not the definition of economics you are defining. You know this is the problem of economy and you have to provide such kind of definition which gives the solution to that. So if there is a limited resources, there is a unlimited needs and wants, you have to define that what you have to do. You have to have a alternative uses. So right answer will be C. The maximum utilization of minimum resources is what you have to do. So the right answer will be C option. Okay, next question. A market economy is one. So I have told you market economy is also known as a capitalistic economy or laissez-faire economy. So capitalistic economy or laissez-faire economy or a market economy, they work on the market forces. What are the market forces? Demand and supply. There is a freedom that will be run by the private sector. So this will be the right answer. Because if there is a government, it will be a socialistic. And other names of socialistic economy is planned economy, and the another one is command economy. These are the three names. Acha, 1 second. I will write like this: command economy. Okay, so these are the three names of socialistic economy, or the two other names of socialistic economy. Market economy is also known as capitalistic, or you can call it laissez-faire economy. Okay, and the mixed economy is known as a dual economy. Mixed economy have another name as a dual economy. So these are the other names, and the right answer will be A option, because market means capitalistic means private industrialists are running the economy. Next, laissez-faire economics means, I have just told you laissez-faire economics means the capitalistic or market economy which works on the market forces, and market forces are demand and supply. So you have to answer which of the following is correct about the laissez-faire economics: A, B, C or D. So a term denoting economic transaction carried out by the state government. Economic transaction in private parties where there is no intervention by the state government, a branch of socialism focusing on welfare. None of the above. It's a laissez-faire economy, it's a capitalistic economy, private industrialists will be there. There is no role of socialism. There is no role of a state government. Achha, 1 second. No intervention, it is written. 1 second. It is talking about no intervention of government. That's true. A term economic transaction carried out by the state or government, that's a socialistic economy. So right answer will be B. Economic transaction run by the private parties and there is no intervention. No intervention will be done by the government. That's the right answer. So the right answer will be your B option. That's the laissez-faire economy's definition. Okay, next question. Next we have economics is the science which studies human behavior. 1 second. Which studies human behavior as the relationship between ends and square means, which have alternative uses. So this definition presents economics as a study of means and ends. Which of the following is true regarding this definition? So definition have been given to you that economics has what? Human behavior study have been done, and it is saying there is a relationship between the ends and scarce means, which have alternative uses. You can have multiple uses of the single resource, the single means. Okay, so this definition presents economics is as a study of means and ends. So you have to tell which of the following is correct. Man has unlimited want and the means to satisfy human wants are limited. This is what the option is saying, means and scarce, or ends and scarce. Resources are not only limited but also have what? Alternative uses. This is also true. Man has to make a choice. This is also true. You have to find out the alternative use now. So right answer is D option. This is what the definition in the question is defining, that these are the things in the economics is there. So right answer will be D option. The right answer is D option. So now let's start the microfinance institution first question. So the first question is talking about, in which year did RBI introduce the lead bank scheme? In which particular year RBI introduced the lead bank scheme that we are talking about? Okay, so what is lead bank scheme? Let's first understand what is lead bank scheme. And the options you have is first 47, 69, 70 and 90. These are the options in front of you. Clear? These are the options in front of you. Now, what is lead bank scheme? Lead bank scheme simply, first of all, it was introduced by RBI, and in this scheme, the fund district, the particular district will have one lead bank. Will have one lead bank. One district will have a one lead bank, and this lead bank can be formed to the public sector banks or the private sector. either public sector bank or private sector bank will be formed as a lead bank in a particular district to promote that particular district. And what they are going to do after becoming a lead bank, first they have to do the branch planning, branch expansion planning. It means where it is required to open the branch of a bank. Okay, the district where there is less number of branches of a bank, because of that the customers are not getting the full services of financial needs or the financial services. So where it is required to open the branch, that will be planned. The second thing, they will plan the credit also. They will do the credit planning also. Like what kind of loan product can be introduced, what kind of credit facility should be in this particular district, that will be done by the bank scheme. Clear? So this is what we are talking about, lead bank scheme. So it is helping the financial inclusion as in the form of having a particular lead bank in the country in each district. Okay, and that district lead bank will be focusing on the branch expansion and credit plan. It was introduced in December, but in which year? In 1969. And the committee that have introduced this, that was the Godgill Committee, or you can call it a Godgill Study Group. Right? You can call it a Godgill Study Group or a Godgill Committee. Both can be answered. The right answer here will be your 1960. The right answer is 1969. And all these are the detail about your lead bank scheme. So the right answer is B. Okay? December 1969. Now, microfinance consists of which of the following? So I have just answered this particular question here already. So let me know which of the following products will be the part of microfinance. So first we have micro savings, micro credit, micro insurance, micro pension, or all of the above. So I have told you microfinance simply means the financial services or money related services you are providing, but you are providing micro services now. So it will be micro savings, it will be micro insurance product, it will be micro pension, it will be micro credit. Micro credit means loan facility you are providing, small loans you are providing, that's a micro credit. All these will be the part of microfinance. All these are the part of microfinance. Okay, so the right answer will be all of the above. Right answer of yours is all of the above. Next. Which of the following types of microfinance institutions are regulated by RBI? So first of all, there are three types of microfinance institution, and out of those three, which will be regulated by RBI? So first of all, if I talk about banking institution or non-banking financial institution, they all are regulated by RBI in the end. So we know financial institutions, we are divided into two parts, that is banking institution and the non-banking financial institution. Banking institution, you all know that will be your all the types of banks in the country. They will be regulated by RBI. But the non-banking financial institution like the NBFCs, the primary dealer, the All India Financial Institution, they are also regulated by RBI. So they have been incorporated under the Companies Act or somehow, but in the end they have to follow RBI. So here the NBFC MFI will be regulated by RBI. Okay, NBFC MFI will be regulated by RBI. Here, so there are three types. First type is not-for-profit MFI. Second type is mutual benefit MFI. Third type is your NBFC MFI. So do remember there are three types, and out of these three, only NBFC MFI will be regulated by RBI. The right answer will be C option. Okay. Next question. Next question we have here. The Grameen Bank model was developed in which country? This was a very famous model. The Grameen Bank model was the very famous model of the which country? The question is asking. After seeing success of the Grameen Bank model, we have introduced the rural. We have introduced the microcredit facility. Because what have been seen, actually the countries are in front of you, India, Nepal, Sri Lanka and Bangladesh. And the right answer is Bangladesh. Now what used to happen in the Bangladesh? The money lenders, the sahukars, they used to exploit the persons who used to take loan from them. They used to charge a high rate of interest from them. And that's a kind of demerit. So that's why the Grameen Bank model was introduced to safeguard these type of people from the money lenders, sahukar, etc. Okay, so this was the Bangladesh. Next. Which of the following are included in self-help group bank linkage program? So we have a certain options here. Out of that, you have to tell which of the following will be covered under the self-help group bank linkage model. And the options are in front of you. So first of all, what is self-help group? Self-help group is simply a group of 10 to 20 people. It can be all women, it can be women and men combined. Okay. Now maximum people understand by the name of self-help group, they always think only it's a group of 10 to 20 women. No. Yes, it's true that government promotes more to the women's self-help group, but it's not like there is only women's self-help group in the country. It can be combined, male, female can be there. 10 to 20 people will be there. And the self-help groups was actually formed to promote the savings habit among the people. To promote the savings habit among the people, we have introduced these self-help groups. Clear? Now, apart from that, apart from all these things, one more important thing is there, that when we have introduced the self-help group, we wanted each and everyone to have a habit of savings. But apart from that, we wanted to fulfill their requirements of funding. So that they will be contributing a certain amount of money in a particular duration. And after that, whoever requires money, that money will be provided to that person. But before that, if I talk about, we have also provided the services of bank linkage. And this bank linkage program was actually recommended by SK Kalia committee. Okay. And after that, we have started providing loan facility to the self-help group. So which of the following are included in the self-help group bank linkage programs? It will be including opening savings account, lending to self-help group, opening current account. No. So right answer is all except C. So you are not providing current account services. As I have told you, the core function, the fundamental of the particular small self-help group is to promote savings, not the current account. You are providing loan, but you are not making them available the current account facility, because they are not capable of taking this facility. Now, they need money for the survival. Even for the survival, they need money. So how they can open the current account? So right answer is your all except C, D option. Okay. Now, acha. Now, as you remember, if you remember on the Telegram, I have shared something with you, like I am coming up with a very better thing for your JAIIB October exam. So we were thinking about hiding it from all of you and then reveal on the 9th of September. But as you know, if you have a certain secret, you have to make it out. So not full secret I will be revealing here, but yes, I want to tell you all that the JAIIB October 2023 very well planned by officers at a 24/7 team, and that will be revealed to all of you on this particular date, on this, focus on what? September, 8 p.m. is the date you have to meet to know which of the following figures in the Fair Practice Code developed by RBI for non-banking financial companies, MFI. So FPIs, FPC have been created by RBI for the NBFC MFI. First, we have, there should be board approved loan application format. Second, no security deposit should be taken from the borrower. Third, a borrower should not be member of more than one self-help group. And fourth, all of the above. So which of the following is a part of what? Which of the following is a part of your Fair Practice Code developed by RBI for the NBFC MFIs? And the right answer is all of the above. They all are going to help under the NBFC MFIs. So this Fair Practice Code has been given by RBI that have to be followed by them, provide the better services to the customer. Right answer is D. Now, mark the correct statement in relation to the concept of microfinance. In relation to the concept of microfinance, which of the following is correct statement that you have to tell? And we have three statements in front of us. First is saying microfinance is a form of financial services which provide small loan. This is correct. Other financial services to the poor and the people above poverty line. So below poverty line people are the weaker section. They are the economically weak society of our country, the disadvantaged population of our country, we can say. And so first option is saying that microfinance provide funding facility, small loan facility and other financial services like the small saving, insurance, pension, etc. to the below poverty line as well as above poverty line population. Second is saying it is economic tool designed to promote financial inclusion which enable the poor and low income household to come out of the poverty, increase their income level and improve their overall living standard. Third is saying microfinance consists of micro savings, micro credit, micro insurance and micro promotion. So what do you think which of the following is? What do you think which of the following is? So the right answer here will be, if you see here, the first option is saying it will provide to the poor and above. No. Above poverty line will be having a lot of services with the bank. They do not have to have a microfinance. They are already the above poverty line population. Then second is almost already covered, or I can say it is 100% correct about your economic tool to promote the financial inclusion in the country, enable the poor and low income household to come out of the poverty and also increase their income level. Achha, on the basis of income level, the micro loan will be provided to the people. And what is that income level? I will let you know in the end of the session because one more question is there about the same topic. Okay, now next. Microfinance consists of micro savings, correct, micro credit, correct, micro insurance, correct, but what about micro promotion? No. So the only correct statement is second option. It means the right option will be C. The right option will be your C option. Clear? C option. Next. Which of the following is correct definition of microfinance loans? Which of the following is correct definition of microfinance loan? And in this particular question, you will understand what is the income limit is required to get the microfinance. So first is saying microfinance loan is defined as a collateral free loan given to a household having the annual household income up to 3 lakh. Okay. Second, up to 5 lakh. Third, up to 1 lakh or none of the above. So what do you think which of the following is correct? So two things are covered and they are correct, that it will be provided as a collateral free loan. It means no security, no collateral is required here. And the second is also correct, it will be provided to the household. But at what annual household income it will be provided? A, B, C or D? So the right answer here will be A option. Up to 3 lakh annual household income will be there. Then the microfinance loan will be provided to them. Okay, so right answer is A option. Next, which of the following is our key recommendations of the Malekam Committee? Okay, so which of the following are the key recommendation of the Malekam Committee? And these are the options we have. First, we have here criteria for defining microfinance loans that is classified as qualifying asset. Second, transparency in interest charges as well as other terms and conditions of the loan. Third, prudential norms on capital adequacy and provisioning requirements of the bank. Fourth, prescriptions related to pricing of credit, terms of a margin cap and interest rate ceiling on individual. So this Malekam Committee was formed by RBI. It was formed by whom? RBI. And this committee has given a certain recommendation to us. And which of the following is the key recommendation of this committee? And the right answer is all are the recommendation. All recommendation has been given by this committee. This committee actually have given around 7 to 8 recommendations to make the banking system, financial system more proper. But here we have 4 statements. So all are the covered under Malekam Committee. Right answer is D. Next we have which of the following is are correct about self-help group bank linkage program models. Right, next question is which of the following is are correct about self-help group bank linkage program models. So we have these 3 models. First model, model 1, model 2, model 3. There are actually 3 models only. Okay. The model 1 is NABARD bank and self-help group will be involved. Model 2 is saying NABARD bank self-help group will be involved, but apart from that, NGO will be involved as a facilitating agency in the model. Okay, NGO will be involved as a facilitating agency in the Model 2. Model 3 says NABARD Bank NGO Self-Help Group will be there. Here the NGO will be involved as what? As the financial intermediary. You can see it is under the model that is NABARD Bank NGO Self-Help Group model it is. So here NGO is not only a facilitating agency, no, it is working as a financial intermediary. So what do you think, which of the following is correct? So the right answer here will be all are correct. Model 1 will not have NGO, Model 2 will have NGO but as a facilitating agency. Model 3 will also have NGO but as a financial intermediary. Do remember these are the 3 models under the Self-Help Group Bank Linkage Program model. Okay, do remember them. The right answer will be your D option. Your questions. Okay, so if I talk about banking sector has a certain type of laws. Like we have a RBI Act, which was introduced to establish RBI in 1934. Second, we have Banking Regulation Act, BR Act is there. It was introduced in the year 1949. That's the Banking Regulation Act. Then we have, apart from that, we have Negotiable Instrument Act, 1881. And then after that, we have your PSS, Payment and Settlement System Act, 2007. So this is what we're talking about in case of your certain acts. These are the banking acts which we have, and all these acts have a different responsibility in the banking sector, in the banking business. Like RBI Act was introduced to establish RBI. BR Act was introduced to define the functions of the bank, the business of a banking. The Negotiable Instrument Act talks about the negotiable instrument of the country, and the last one, PSS Act, Payment and Settlement System Act, it talks about the payment and settlement system of the country. The retail payment system, the NEFT, RTGS, IMPS, NACH, UPI, everything comes under the PSS Act. So these are the 4 important acts of banking sector. Now if I talk about the Act is a very big document. Act talks about everything, each and everything, minimum to minimum thing will be defined under this particular act. So do we have to cover everything? No. We have to cover the specific sections which are very important to know. Like for example, if I'm talking about RBI Act and the RBI Act, I should know that the 2 sections are very important. What? The section 42.1 that talks about section 42.1 that talks about your what? It talks about your CRR. Second, I know that section 22, it talks about that RBI has the sole right to print all the denomination of the currencies except rupee 1. This is what the section 22 talks about. Now, if I talk about BR Act, in the BR Act, we have a certain important section like the section 24. It talks about SLR. Then we have a section 5B. It talks about the business of banking. We have section 6 that talks about the various form of businesses that can be performed by the bank. Section 8 and 9 talks about the prohibition of the function that cannot be performed by the bank. So these are the certain important acts. Apart from that, in the Negotiable Instrument Act, section 13 is important, section 456 is important, section 131 is important. So these are those. In the PSS Act, section 4 is very important. So these are the sections which are important, and that those sections are related to your syllabus that you have to cover. So do make sure when you are reading the laws are very big, but you have to find out which sections or which particular part of the law is very important. Okay, so this is which matters. Like in the law, it's not possible to read whole document of the law. You won't be able to cover the whole document of the law. That's why the specific sections, the specific points you have to remember under the law. Okay, now let's discuss this chapter with the form of question. And do remember, in the end of the session, I will be asking from all of you that how many answers you have given correct. So do count the answers here. First is saying when the Banking Regulation Act 1949 was made applicable to cooperative bank. So when the Banking Regulation Act was made applicable to cooperative banks. So we know that cooperative banks used to follow the Cooperative Societies Act, Society Cooperative Act they used to follow. But the Banking Regulation Act now covered the cooperative banks from which particular date? Is it 16th of March 1949? Is it 1st of April 1965? Is it 1st of March 1966? Or is it 1st of April 1966? What do you think? Which of the following is the date from when we have did what? We have implemented the Banking Regulation Act for the cooperative banks. So, right answer is from 1st of March 1966, the Banking Regulation Act was applicable to the cooperative banks. So, the right answer is C option. Okay, right answer is C. Now, next we have here the RBI Act 1934 is divided into dash chapters and dash schedules. So, when we talk about RBI Act 1934, it is what? It is simply the dash chapter and dash schedules. RBI Act was introduced to establish RBI. Like what functions of RBI should be there, how RBI will work, what will be the rules and regulations about RBI on which RBI have to follow, the Central Board of Directors, the management, the capital, then the functions of the RBI, everything is defined under the RBI Act, right? So here, if we talk about RBI, RBI has two schedules. That is Schedule 1, Schedule 2. But when it comes to the chapter, it has 5 chapters. So the right answer will be RBI Act have 5 chapters and 2 schedules. So that will be talking about chapter 5 talks about penalties, chapter 4 talks about general provision, chapter 3 talks about the central banking function, chapter 2 talks about the management, or I can say the capital and etc. of the bank, and the chapter 1st talks about the preliminary. Okay, so these are the 5 chapters and we have 2 schedules, that is Schedule 1 and Schedule 2. So right answer will be A option. Okay. Next question is talking about that the Central Board of Directors of RBI is required to meet at least dash times in a year. So when it comes to the Central Board of Directors, there should be total maximum 21 members, out of which 1 member will be governor, 4 members will be deputy governor, 4 members will come from local boards, 2 members will come from Ministry of Finance, and the remaining 10 members will be nominated by Government of India. So these are the total Board of Directors of Reserve Bank of India, or you can call it a Central Board of Directors of RBI. Clear? And how many times they have to meet minimum in a year? That is the right answer, 6. The right answer will be 6 times in a year the Central Board of Directors have to meet. And do remember, there are 21 members in the Central Board of Directors, and the numbering I have given you. 1 governor, 4 deputy governor, 4 members from the local board, 2 members from the Ministry of Finance, then 10 members will be nominated by the Government of India. This is the Central Board of Directors of RBI. Okay, and they decide how RBI will work. Like RBI is the statutory body. Now, RBI have its own act. So, if I talk about RBI 100% holding is with the Government of India. So, can we say that RBI will work only on such a situation, whatever Government of India asks for? Obviously not. RBI take its own decision by itself, because RBI is a statutory body, because RBI has its own Act 1934. So, the Central Board of Directors is the actual board which decides what RBI have to do, what RBI do not have to do. Okay, and that Central Board of Directors have 21 members. Now, which among the following is our correct feature of Banking Regulation Act? So, out of the following, what do you think, which of the following is the feature of your Banking Regulation Act? So, 5 features have been written here. Out of that, which you have to tell which of the following is correct. So, first is saying prohibition of banking companies from accepting deposit repayable on demand. Is it possible? Like if I talk about business of banking, the business of banking says the banks have to accept deposit from public for the purpose of lending or investment, and that should be repayable on the demand. And it is saying that Banking Regulation Act has a feature that banking companies cannot accept deposit. It can't be true. This is wrong. Second is saying prohibition of trading to eliminate the non-banking risk. This is true. We have said that we have to eliminate the non-banking risk. This is true. Third is saying restructuring, restricting the payments of dividend. How you can restrict the payment of dividend? If you have a shareholders, you have to make the payment to them. If you are not making the dividend payment to the shareholders, they will not invest in your company, in your bank. So it cannot be right. Inclusion the scope of legislation of banks registered outside the province of India. This is true. Introduction of comprehensive system of licensing of banks and their branches. This is also true. So these are the true options. It means 2nd, 4th and 5th, they are correct feature of your Banking Regulation Act 1949. So the right answer will be your D option, 2nd, 4th and 5th. Right answer will be your D option, 2nd, 4th and 5th. Clear? Next question is talking about which of the following sections provide a list of various forms of businesses which a banking company may do in addition to the business of banking. So when we talk about business of banking have three features. First, what we can call, first we have accept deposit from the public for the purpose of lending or investment, and the third one, last one, will be your simply repayable on the demand of the customer, it will be done. But apart from that, bank provide demat account, bank provide insurance policy, mutual fund, etc, etc, etc. So bank is providing all these services to the customers, right? So all these services are the various form of business that banks provide to the customer. So it is defined under which section? Section 5, 6, 7, or none of the above? Under which section it is defined, let me know. Section 5, 6, 7, or none of the above. So right answer is section 6. Section 6 talks about the various forms of businesses that is provided by bank. So right answer will be your B option, section 6. And section 5B talks about the business of banking. Next. In which year did the Reserve Bank of India commence its business? So when RBI started its business, that's the question is asking. So we have these options. So let me know which of the following is true. If I talk about RBI's history, it is important for us. So first of all, in 1926, Hilton-Young Commission was introduced. This commission is also known as Royal Commission on Indian Currency. This is the first commission which recommended that we should have a central bank of the country. In the 1928, this Hilton-Young Commission was rejected in 1928, and then in 1930 we got the Central Bank Investigation Committee. Okay, in 1934 RBI Act was established. RBI Act was established, and in 1935, 1st of April, RBI was established. Okay, RBI established in the year 1935, 1st of April. The date is 1st of April. But when RBI was established, the government of India was needed 5 crores capital. The initial capital of RBI was 5 crore. So we needed the 5 crore capital to establish the central bank of the country, but we didn't have this capital. So what government did? Government has issued the shares of RBI to the public, and public purchased the shares. So that's why when the RBI was established on the 1st April 1935, it was the private shareholders bank. It was what? It was the private shareholders bank. RBI was the private shareholders bank. Clear? And then on 1st of January 1949, nationalization of RBI was done. Nationalization of RBI was done. Okay, so on 1st January, nationalization of RBI was done. Why it was done? Just because if we talk about RBI, RBI is the central bank of the country. It had the ownership of the public, like person like me and you was the owner of the RBI because we have purchased the share. So that's why Government of India has purchased 100% shares of the RBI. And after doing that, RBI became the government's bank on the 1st January 1949. So when RBI started its business, RBI started its business in the 1935 year. So all these years regarding the RBI establishment is important. Hana? So do remember these. These are very important. Next, so right answer is 1935. Next we have Section 4 of RBI Act. Which section? Section 4 of RBI Act 1934 talks about dash of RBI, and the initial capital of RBI was dash. So I think second dash answer I have given to you, that initial capital was the 5 crore of RBI. Now what does section 4 talks about? That you have to answer. Now you can see what I did. I have maintained the initial capital value same, so that you will be confused. Like if there will be only one 5 option, then you will be answering that particular option only. But now you have to answer, is it management, capital, central banking function, right to issue banknotes? So the right answer is capital. The section 4 of RBI Act 1934, it talks about the capital of the RBI, and the initial capital of RBI was 5 crore. How much the initial capital? It was the 5 crores. Okay, so right answer is your B option, that is 5 crores. Next, Under which act is RBI empowered to be a banker to the government of India? So we know RBI is the central bank of our country, and RBI has a lot of function like banker to the banks, banker to the government of India, lender of last resort, manager of foreign exchange reserve, manager of KYC NPA, issuer of currency. Apart from that, formulates the monetary policy, it regulates the money market. So all these are the functions of RBI. Right. So one of the function is banker to the government of India. So why RBI is a banker to the government of India? Because RBI manages the reserve, the funds of the government, the budget of the government. RBI maintain the mismatch between the revenue and expenses of government of India. If there is some kind of mismatch, like expenditure is more than income, in that situation, RBI gives loan to the government of India. Apart from that, RBI also sells the government security of government of India. So that's why we can say RBI is the banker to the government of India, because RBI works as an agent for the government of India, right? That is what we're talking about here. So this function that RBI is an agent of government of India, it is defined under which act? It can't be Banking Regulation Act, because this talks about the functions of bank. Negotiable Instrument Act talks about the negotiable instruments only. Public debt talks about the public debt capital of the government. Then RBI Act, because RBI's function is the banker to the government of India. RBI has its one of the function that RBI is a banker to the government of India. It means under the RBI Act it will be defined. So right answer is A. Okay, next question. Now, according to section 8 and 9, which of the following is the prohibited function of the banks? So first of all, which act we are talking about here? It's very simple. You are talking about the prohibited function of bank. The functions of banks are defined under the Banking Regulation Act 1949. Okay, because Banking Regulation Act it is now what bank will do, that is defined under the Banking Regulation Act. So first is no banking company shall directly or indirectly deal in the buying or selling or bartering of goods or engage in any trade. Okay. No banking company shall buy or sell or barter goods for others. Okay. Next, no banking company shall hold any immovable property, howsoever acquired for more than 7 years from the acquisition thereof. However, it can hold any immovable property that is required for its own use. So what do you think? All are correct. You cannot purchase or sell. You cannot deal in the trade. You cannot purchase or sell you cannot become a mediator for the barter goods. You cannot hold any immovable property, howsoever, which is acquired for more than 7 years. Okay, from the acquisition thereof. So all these three functions, all these three statements are the prohibited function of a bank that cannot be performed by the bank. So right answer is D. That is all. All are the prohibited functions of a bank. It cannot be performed by any bank. Okay, now, in which year the RBI was converted into a public entity? In which particular year RBI was converted into a public entity? Let me know. Public entity means government's entity. Public is not like individual person's entity. No. Public, when you use a term public in the economy, it represents you a state. It represents you, or not the state, but the government. One second. A state means obviously you can call it a state, or either you can call it a government. So when RBI became the government body, it became government body on 1st of January 1949. Because on that day we have done the nationalization of RBI. Right answer is D. So RBI is the central bank of our economy, RBI is the central bank of our country, and RBI needs to measure the liquidity in the market. RBI needs what? To measure the liquidity in the market. So RBI have to measure the money supply. RBI have to measure the money supply in the economy. And when RBI measure this money supply in the economy, this will be done by RBI with M1, M2, M3, M4 and M0. Out of that, M1 is known as narrow money. M3 is known as broad money. They are very famous. They are broad money and narrow money, and they are very famous. In contextual, maximum number of questions will be asked from these two. Now it's very obvious, like RBI is the central bank of our country. It's the responsibility of the RBI to manage the liquidity in the market. Liquidity means the cash flow in the market. And how RBI will be managing this cash flow? With the help of monetary policy. So we know that RBI makes monetary policy. RBI makes what? RBI makes the monetary policy. So this is the responsibility of RBI to manage the money supply. Let's say in the economy, the money supply is increasing. If the money supply increases, the demand of goods and services by the consumer increase. If we have more money, we will purchase more goods and services. If the demand increases, the supply will decrease, because the demand and supply will always have an inverse relationship. They always have an inverse relationship. So if the demand is increasing, supply will definitely be decreased. Okay. Now after that, the prices will start increasing and the money value of goods and services will be decreasing. And that creates inflation in the country. That creates what? That creates inflation in the country. Okay. Now, if money supply is reducing, then people will demand less goods and services, and then the supply will be more in comparison to demand, and then the prices will reduce, money value will increase, and this will create deflation in the economy. So you can see, if the money supply is more than required, then it creates inflation in the country. If money supply is less than which is required, it will create deflation in the country. So to make economy capable of being stable, we have to stable the money supply. And to stable the money supply, RBI makes monetary policy. RBI makes monetary policy, and the objective of monetary policy is what? To have a price stability. To maintain price stability is one of the objective of monetary policy in our country. That's what RBI is doing. But to maintain the price stability in the country, RBI have to know like how much money is there in the economy. And how RBI will know how much money is there in the economy? With the help of these measures of money. So with the help of M1, M2, M3, M4, M0, RBI will know what amount of money is available in the economy. Accordingly, RBI will make the monetary policy to maintain the price stability in the country. So they all are related to each other. Now, what is inflation? This is what we have discussed about about the condition measures of money, and what is the reason behind which RBI have to maintain this measures of money, right? Now let's talk about a little bit about inflation. So what actually the inflation is? Inflation, if I am talking about, let's take a question here, like what is inflation? This is the question for all of you. What is inflation? Okay. Now I have first option, increase in money supply is inflation. I have second option, increase in demand is inflation. I have third option, increase in prices is inflation. I have fourth option, that is reduce in the money value is inflation, and I have fifth option, that is all of the above. So which of the following option you will give that this is the right answer for this question? What is inflation question is asking, and these are the option in front of you. So let me know which of the following according to you is correct about the inflation. So can I say that inflation is simply rise in the money value of goods and services? Can I say inflation is the increase in the money supply? Inflation is the increase in the demand? Can we say that? Let's understand this. So if I talk about our country, I have never heard this statement from any person that Mr. Ambani have more income now, that's why there is inflation in the country. I never heard someone saying that the demand of crude oil from the India is increased, that's why we have an inflation. I always heard people talking about like the petrol we used to purchase at 70 rupees per liter. Now the petrol is 140 rupees per liter. It means the price has been just doubled. So I always heard people talk about in context of the price, and that's what the inflation is. So whenever the prices of goods and services are rising, that will create your inflation. So the right answer is prices increase. Increase in the prices of goods and services is it's an inflation. Okay. Now, what happened? What happened if we're talking about inflation here? So what happens here? First of all, let's see. What conditions are there? So economic conditions will be like whenever we talk about the increase in the prices of goods and services, the first of all money supply will increase. So whenever the money supply increases, what happens? Whenever the money supply increases, the demand of consumer will increase. Whenever the demand of consumer increases, the supply will decrease because the demand and supply have an inverse relation, negative relation or opposite relation. So demand increases, supply will decrease, so prices will start increasing because people are asking for more goods and you do not have a goods, so prices will what? Increase. In that situation, the purchasing power of money will be decreased. Purchasing power of money, or you can call it a money value also. The money value will decrease. Why money value is decreasing? The reason behind is because the prices are increasing. Let's say I used to have 200 rupees. I used to purchase 2 products in 200 rupees. This 2 pen I used to purchase in 200 rupees. Now what happened? The prices increase. Now this 1 pen will be available in the market for 200 rupees. So I used to purchase 2 commodity. Now I am purchasing 1. It means the 200 rupee note which I have now, it has a less capacity to purchase goods and services comparatively that I used to have. It means the purchasing value of 200 rupee note has been decreased. The reason behind, because the prices increases. So whenever there is an inflation, the money value of the currency will definitely be decreased. Okay, so all these terms are related to inflation, but they are not inflation. Inflation means rise in the prices of goods and services. Why prices are rising? Because there is a more demand. Why there is more demand? Because people have more money supply. And after increasing prices, what impact will be seen? The money value will be decreased. So this is what we are talking about, inflation. Okay, so I hope till now everything is clear to all of you. Now we will be starting practicing the question, and in the end of the session I will be asking you all that how many answers you have given correct here. Okay, so do count how many answers you are giving correct. So first question here is that which of the following statement true about inflation? The statement which is true about inflation, and we have these 4 options in front of you. That is, first thing, a rise in the general level of prices leads to fall in the purchasing power. Both A and B, none of the above. So what do you think, which of the following is correct? First is prices are rising. Second is purchasing power leads to decrease. Third is both A and B. Fourth is none of the above. What do you think, which of the following is correct? So right answer will be both A and B, because it's very obvious the general level of prices will increase due to the inflation. It leads to fall in purchasing power. Is it true? Yes, it's true. Why it's true? Inflation leads to a decrease in the purchasing power of people as well as money. Because let's say money supply increased, the demand increased, but the supply decreased, because of which the prices are keep rising. This is what inflation is. When the prices are rising, it means the cost of living will also rise. Cost of living simply means the money you have to spend to survive. That's the cost of living. It will increase. And when the cost of living increases, you somehow have to decrease your spending, and that will promote the lead to fall in the purchasing power. And similarly, the money value reduces because the money will be able to purchase less goods and services comparatively earlier. So the purchasing power of people and the purchasing power of money both will decrease. So right answer will be C option, sorry. Okay, right answer is C. Second question we are talking about here, the demand deposit of banks are included in. So if we talk about bank have a certain assets. Every business have assets and every business have liabilities, right? So if I talk about the asset of a bank, the asset of a bank is the loans and advances which bank provide to its customers. Okay, and what is liability? Liability means simply public deposit. Liability means public deposit, that's the liability. Okay, and these deposit are of 2 types. That is demand deposit, the type of deposit which will be dependent on the customer demand, and the second one is the time and term deposit. So the demand deposit covers CASA, current account, savings account. Time deposit covers RAFA, recurring account and fixed account. So demand deposits are those deposits which can be deposited as per the demand of the customer, withdrawal as per the demand of the customer. Time deposit or term deposit are, on the other hand, the types of deposit which will be there for a particular period of time. Okay, so now this is what the deposit we are talking about, and this is what the demand deposit is. Demand deposit means CASA, and the question is asking which of the following includes the demand deposit. So we have options M1, M2, M3. And to answer such kind of question, you should know what is M1, what is M2 and what is M3. Okay, so here let's understand this. If I am talking about M1 M1 is equals to currency unit plus demand deposit plus deposit with RBI. This is what your M1 is. M2 we have M1 plus post office savings. PO savings means post office savings. M3 we have M1 plus time deposit. I will explain all these, don't worry about it. And the M4 we have M3 plus post office savings, but excluding national savings certificate, right? So what is M1? M1 is saying CU plus GD plus deposit with RBI. Currency unit, CU means currency unit means whatever notes and coins public have. DD means demand deposit, whatever CASA public bank accounts have. Then we have deposit with RBI, where whatever reserves or deposit RBI maintains. This is the M1. M2 means M1 will be there, CU plus DD plus deposit with RBI will be there, plus you will have a post office savings. In the post office, you have FD, you have RD, you have MIS, etc. All these will be covered. Then M3 will be M1 plus term deposit. Term deposit means your RAFA. M4 will be M3 plus your post office saving, but the national saving certificate amount you have to be excluded. So here, the question was asking which of the following includes the demand deposit. So M1 includes demand deposit, M2 includes demand deposit, M3 includes demand deposit, and M4 includes demand deposit. Because in M2 we have M1 have demand deposit, in M2 we have M1, in M3 we have M1, in M4 we have M3. So all these measures of money will include the demand deposits of the bank. It means the right answer here will be all. M1, M2, M3 all will be having the demand deposit. So the right answer will be your D option. Okay. Next question. Under money supply concept, the term broad money include which of the following? So broad money, I have told you which of the following is broad money. M3 is a broad money, and I have told you the formula of broad money. So let me know which of the following will be the right. Which of the following statement will be right? Let me know that. A, B, C or D? Okay, so if I talk about this particular question, the question is talking about what is M3, and you can see M3 will include the term deposit. The first one have deposit and public deposit. It do not include term deposit. Then we have currency with public demand deposit, other deposit with RBI. It also do not have term deposit. Fourth one is saying currency with public plus bank deposit plus post office deposit, but it do not include time deposit. Here is the time deposit with bank, the demand deposit of a bank, and the currency with public. So right answer will be your C option. Okay, right answer will be C option, which will cover the time deposit. It means RAFA will be covered under the M3, and broad money means M3 only. Okay, next, the most important money supply indicator monitored by RBI is dash. So we have measures of money M1, M2, M3, M4. So out of these four, which of the following is the important money supply indicator for the Reserve Bank of India that RBI calculates? Let me know which of the following is true. A, B, C or D. So I think it is very easy to answer. RBI measures this money supply because of the reason, because of the reason RBI wants to know how much money is there in the economy. RBI wants to know how much money is in the economy. That's why RBI is calculating this, right? And RBI will want to know how much money supply in the economy, and the money supply in the economy that will be defining every liquidity to the RBI. That's a broad money. So right answer is C, because it will cover deposit with, it will cover currency unit, the money with public, it will cover demand deposit, the money with commercial banks and all with the in the CASA, then the term deposit, then the deposit with RBI. Every type of money which is available in the economy will be calculated by the M3, and that's why it is the important money supply indicator that RBI calculates. So right answer will be your C. Next question. Demand deposit with a bank include all liabilities which are payable on demand and they include dash. The demand deposit is what? With a bank include all the liabilities. It do what? It include all the liabilities which are payable on the demand. So they will include what? Options are these. Out of that, let me know which will be included here. So demand deposit with a bank include all the types of liability which are payable on demand. It will include. So demand deposit itself represents that the deposit you have given to the money that will be run on as per your demand. If you want to withdraw it, you will withdraw it. If you want to maintain it, you can maintain it. There is no such kind of restriction. Okay. Now, which of the following is right? The current deposit, demand deposit portion of savings account. This is correct. Margins held against letter of credit and guarantee will be covered. The balance in overdue fixed deposit, cash certificate, cumulative recurring deposits, all these will be covered under the demand deposit with the bank liability we are talking about. So all answer will be your D option. 1, 2, 3, all the statement were true. Next. Which of the following measures of controlling inflation? One second. Which of the following controlling measures of inflation can be taken by Reserve Bank of India and not by government? So we know inflation is a rise in the prices of goods and services, and that can harm the economy. If the prices are increasing above a certain level, it will create a loss for the economy. So inflation is good for the economy, but a limited inflation is good for the economy. So that's why if inflation is rising, this is the responsibility of the RBI to control that. So that's what we're talking about. RBI have a certain measure that is known as a monetary measure which controls the inflation. Government of India takes the fiscal measures to control the inflation. Similarly, we have foreign trade measures. It helps in the controlling the inflation. Apart from that, we have other measures in which production will be controlled so that inflation will be controlled. So out of these, you have to tell which of the following the controlling method used by RBI. Which of the following controlling method should be used by RBI? Okay, so the right answer here will be first is saying introduction of progressive introduction of progressive tax system. This is in the hands of the government of India, not RBI. Control over public expenditure again done by the government. Then profits of the public sector is in the hands of the government. So these three measures will be taken by the government of India in the fiscal policy, but the rationing of credit will be done by Reserve Bank of India, in which RBI tells in which particular sector how much loan you can provide or how much loan you cannot provide. What down payment you have to take, what down payment you are allowed to take in case of what type of loan, also how many installments you can make in a case of loan. All this will be done by RBI. That is known as your rationing of credit. So right answer will be C option. This is the measure that RBI takes. Which of the following below indexes associated with the given statement? Like it is an index that tracks the change in the retail prices of essential goods and services consumed by the households. So whatever goods and services we are consuming, that prices will be calculated on the retail level. And which of the following index calculates that? This is the question. Is it a CPI? Is it a WPI? Is it a PPI? Is it a CPI for agriculture? So it can't be WPI because it measures the inflation in the wholesale market. It can't be producer price index because it takes the inflation at the production stage. Okay, so we have two options, consumer price index and here the CPI also. So this is what we know, that WPI measures the inflation at the wholesale level and CPI measures the inflation at the retail level, that we know, right? So in this situation, A and D can be right. Out of these two can be right. Now we are talking about essential goods and services consumed by the household. Here you are talking about CPI for agricultural labor. So right answer will be what? It will be B. Sorry, not B, this A, Consumer Price Index. Okay, so CPI measures the inflation at the retail level, and CPI also maintain the record of what? It also maintains the record related to your retail level plus the cost of living of the public. So right answer is A. Next. If the public finds ways of making the same amount of money perform a larger amount of transaction than before, then dash. So what you're talking about? If the public finds ways of making the same amount of money perform a larger amount of transaction. Let's say I used to purchase 200, I used to give 200 rupees and used to purchase 2 pen. Now I am giving 200 rupee, but I am purchasing 4 pen. It means the same amount of money which I have, it performing the larger amount of transaction. Okay, it is performing the larger amount of transaction. This is what the question is asking about. This situation be known as what? And these are the options in front of which of the following will be right? The demand for money must have risen. Velocity of money have risen. Incomes and prices must have risen. The supply of money must have risen. So which of the following is right? Which of the following is right? So it's very obvious the demand for money have not risen. The income and prices must have not risen. The supply of money must not have risen. The velocity of money have been risen. It means that the purchasing power of money increased. That's why in the 200 rupee you are able to purchase 4 products. So when the money supply, money value of the currency increases, that's the velocity must have risen of the money. So right answer will be your B option. Right is B option. Of cash settlement that is proposed to be made by NARCL. So NARCL stands for National Asset Reconstruction Company Limited. So I hope you all have heard about the NARCL, or if you have not, so definitely you have heard about the ARC. ARC is Asset Reconstruction Company. What is ARC? ARC stands for Asset Reconstruction Company. The Asset Reconstruction Company used to purchase the NPA of a bank. The Asset Reconstruction Company used to purchase the NPA of a bank and then try to overcome that amount that they have purchased from NPA by selling the security in the market, by collateral in the market. So now NARCL have been introduced as a concept of a bad bank. Now what does bad bank will do? Bad bank will take the NPA of a bank. All the NPA of a banks will be transferred to the bad banks, and bad bank will think or make the strategy how this NPAs have to be recovered. Now, first of all, what is NPA? Non-performing asset. The bank has provided loan to the customer and customers are not paying the installment or the principal amount in the installment, interest and principal amount in a certain installment after 90 days. That is known as NPA. So it's a credit facility on which customers are not repaying the loan to the bank. So to recover that, we have created bad bank so that the bank's balance sheet will be cleared and bank will have a time to think about what new can be done, how to expand the business. Otherwise, banks were always thinking about how to recover the NPA. Okay, so that's why the concept of bad bank was introduced. That is your NARCL. So what percentage of cash settlement proposed to be made by National Asset Reconstruction Company Limited? Is it 5%, is it 10%, is it 15% or a 25%? So the right answer here is 15%. 15% cash settlements are allowed. Okay, so right answer is C. Next question is talking about which of the following is not a sector included in infrastructure. So which of the following is not a sector that is included in the infrastructure? Infrastructure simply means your the structure of the economy that you are providing. There are different types of infrastructure. We have hard infrastructure, we have soft infrastructure, we have green infrastructure. Green infrastructure simply means those infrastructure which tells you about the value of natural resources or the value of environment. That's the green infrastructure. Hard infrastructure is the infrastructure which talks about your that link the economy physically, like the roads, buildings, ports, airports. These are the physical infrastructure that link the network, that provide you physical network to reach from one place to another, and they actually provide the modern development of the country. And if I talk about soft infrastructure is simply an infrastructure that is required to make economy keep running. like your financial sectors, like banking sector, like your schools, your hospitals. They are the necessary of the economy to keep it running. That is known as your soft infrastructure. So out of the textile mills, waterworks, waterways, and canal network, what do you think, which of the following is not a sector that is included in the infrastructure? And that's a very direct answer. That will be your textile mills. The answer will be your textile